Hey, good morning, everybody. Welcome to Wednesday, December 4th. I hope your week's off to a good start. Obviously, the first 2 days of trading this week have not been good at all. And hopefully today we'll see some trading and turnaround of that as Dave and I look at jobs and some other things that are coming out this morning. I want to thank you for joining us. Dave will be with us here in just a minute.
105.7 Light FM. Short record here, and that messes with us every time we do that. Time to check in on your money and see what's going on Wall Street. It was a big loser yesterday and a hairpin turn on the futures when the rumors started going crazy about the middle of the overnight hours. Let's find out what the heck's going on Wall Street this morning. Phillip Statler is in his office at Statler Financial Services in downtown Sebring. I got to warn myself when I got a short record, Phillip. Good morning. How are you?
Hey, good morning, man. You really threw me for a loop there. At the end, it's like, okay, got to go.
Yeah, we're on. Go. Get ready. We don't know what we're going to talk about. We're going to do it. But what we were talking about during the record was yesterday was a crapola day by any definition. I mean, the Dow was down 280 points on all the saber rattling between us and China about the trade deal not being done until sometime next year. And Trump had said, maybe not until after the election. And everybody went, oh, geez. Well, somewhere between 2 and 4 a.m., word got out that things were moving real quickly, and we might actually have a Chinese trade deal done by December 15th. And you and I were doing the calculations, Phillip. Inside of about an hour and a half, the Dow Jones Industrial Futures went up by over 400 points. You think the market liked the idea, huh?
They definitely like the idea. And let me just still caution people, it's a rumor, but from a good source that they're getting really close to a deal. They're trying to figure out which tariffs are going to get reduced on items. And the rumor by Bloomberg is that by December 15th we'll have a deal. How many of these have we seen, Dave?
I'm getting dizzy, man. I'm getting dizzy about this. And I got to tell you, if I were trying to ensure some stability and planning on retiring in the next month or so, I'd be looking at this and saying, holy crud.
Yeah, exactly. I would say if you're going to retire in the next year or two, you definitely need to make sure that you've got everything in the right places and that you're ready for the disaster that could come anytime now.
Yeah, I mean, it could be party time, could be disaster, because, I mean, yeah, the way we swing on these rumors is almost to the point of ludicrous.
It is. It's. I mean, if you're on a roller coaster making these ups and downs, it could be either a fun ride if you like roller coasters, or if you don't, you might be messing with an upset stomach after this.
Yeah, I was going to say, don't eat lunch before trading on the stock market these days. It's not fun. The other thing that kicked in this morning, and this was the bad news, Chinese trade rumors being good news. ADP, first Wednesday of the month, they always tell us how we're doing as far as private sector job ads for the month before. And you and I both figured this would be an artificially high number because, well, the retail stores are laying on seasonal employees. We should have a monster number, but holy crud. 67,000 private sector jobs. It's only a little over 1,000 per state.
Yeah, not good at all, Dave. And obviously, China trade is taking Trump on everything here in terms of what's happening in the pre-markets. But it was a huge miss. I mean, they were expecting ADP to come out with 150,000 new jobs. And we end up with the slowest number since May, down to 67,000. And then to add some other things to that, Dave, they revised October, which came in at 125. They revised it down to 121. So, literally close to half of what we were in October is the number for November. And you and I both thought, man, based on Christmas and the holidays, that we would think that number would be higher.
Yeah, it's kind of a counterintuitive number, which makes me wonder once again, are we talking data point or are we talking about a trend? And again, one revision downward in October was not a bad number. It wasn't really atrociously bad, even at 121. 67 is so far out of whack. I got to wonder whether we're looking at just a single data point with some data missing somewhere.
Yeah, you do have to wonder that. The headline, though, according to this, the guy that published this article was like, hey, the jobs market is, quote, losing its shine. So we'll have to see what Friday bears, right? Because Friday will be a big number.
Absolutely. The other thing that needs to be brought into the point, and we always have to mention this again, by any traditional economic definition, we're past full employment. So a small number of added jobs in a month could just mean, doggone, they couldn't find anybody to fill a lot of those positions too.
And that could be. That's always a possibility. But they definitely aren't creating them, or they didn't fill them anyway. Let's put it that way.
Absolutely. Disappointment no matter what. The number stinks regardless of what the cause is. I've got a few companies that are stragglers as far as earning reports are concerned, and I know you have a few of the details I didn't get. What do we have for an indication as far as how the companies we buy and sell are?
Well, I think you had the details on Campbell's Soup. I had the broad picture that they did better than expected, though the sales were slightly below expectations as their organic sales fell by about 1%. And so they're down, well, not too bad. They're down about almost 1% this morning before we get started.
Yeah, I was going to say that they were an 8-cent beat on earnings per share, but their overall revenue, and I had the top line figure on the thing, the overall revenue was off by, I mean, we're talking about hundreds of thousands, and that was about it. I mean, it was not a big miss, but it was a miss. So the market's penalizing them heavily for low sales, aren't they?
Yeah, they really are. So they're getting beat up. Then I had a common name in the business world when it comes to what we call CRMs, or relationship management software.
Mm-hmm.
Salesforce reported yesterday after the market closed. They beat on earnings substantially by about 9 cents a share. And then we had, revenue exceeded forecasts as well. They're seeing a big rise in demand as more businesses move to that cloud-based computing system.
Which leads to the question of where's the other shoe, because they're not on the list that I'd expect that report to show up on.
Yeah, you really wouldn't. And their 2020 profit forecast was above the street, but I think the issue here becomes more of the current quarter, and the current looking at this quarter is causing a little bit of drag this morning. So they're down about 9%, not 9%, 9/10%
Yeah,
this morning before we get
I
started.
was going to say it's not a lot of moves on the big losers this morning. They're toward the top of my big loser list at about 1% down, and I'm considering that overall good news. But as you were talking about all these numbers getting beat, what are they doing in the red this morning, right?
Yeah, exactly. So you just have that, and then Workday, which is probably doesn't mean much to the folks out there, but it's a human resources software company. They beat by 15 cents a share. Their revenue was above estimates. They raised their full year forecast. More people are signing up for that subscription. But again, they gave a weaker than expected outlook for next year, even though they raised their guidance. It wasn't as much as what everybody expected. And so they're trading down this morning about 4%.
All right. Any good news to be had as far as the reports are concerned?
That's it, man. That's all the reports I had. And to add a little bit more to the bad news, I saw that mortgage applications were down 9% last week.
I was looking for that, and I figured that we probably wouldn't have good news on that simply on the time of the year, but we just don't have a lot of merry sunshine except for the rumor about the Chinese deal, and that's doing a heck of a job at improving things this morning.
You're right, it is. That's definitely propping things up this morning in terms of the market.
Understood. 45 minutes before we open, how good is the good news so far?
Well, it's pretty good, Dave. We're up about a little less than 0.5% across the board, which is not as good as it was 30 minutes ago. Let me just put that. We've got the Dow up 0.4%. We've got the S&P 500 up 0.4%, and we've got the NASDAQ up about 0.5%. So things are looking good there. And then we look at kind of the commodities index. We've got gold and silver down just a tad. We've got crude oil up 1.75%. That's a pretty big jump. It's up to $57.09 a barrel right now.
Woozy.
Yeah.
Interesting on the overseas markets. Evidently, Asia didn't have a chance to recover into the rumors. They were down by like 2% in Hong Kong when I went to bed last night. Ended up closing down by 1.25%. Japan down by about 1% overnight last night. England and the rest of Europe are kind of doing a split vote. Germany's up and the Great Britain markets are down this morning. I did notice that investors are saying, whoa, get me out of here for a little while. The 10-year Treasury yields are down by 10 basis points this morning, which says somebody's saying, get me into some money where it's going to go nowhere for a while, right?
Well, yeah, I mean, I think we've seen a lot of ups and downs the last 3 days or so in trading. And so, that always gets people's attention. And that's why, you want to make sure that your advisor has you in a well-rounded, risk-adverse portfolio. That's what we've done for our clients. That's what we look at. I met with a lady yesterday that remembers back to '08, and she says, my guy didn't call me when the market tanked and I lost a huge amount of money. And so that's the important part, is that you're communicating with your advisor to make sure that you're protected on the downside. And it's a good time to get a second opinion to make sure you're protected on the downside, Dave.
Absolutely. My guy didn't call me, and I lost about 70%. Thank God I could afford to ride it out then. Today, I couldn't. So, yeah, solid advice is necessary. How do I find you on the phone to make that appointment?
Give us a call at 382-0037. Check us out on our website at statlerfinancial.com. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. for you early risers, noon on Saturdays, and then 10 a.m. on Sunday mornings on News Talk, 7:30 a.m.
All righty, and back here again tomorrow morning, same time on Light. Phillip, thank you so much, and we'll see you in the morning, all right?
All right, man, you have a great day.
Thank you. Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done your homework?
Hey, folks, I want to thank you for joining us today. Hey, look, if you are 5 years out from retirement or you are already retired, it is time for you to get a second opinion on your current retirement portfolio. Let us help coach you into and through retirement. And that starts with the financial x-ray to make sure you don't have too much risk in your portfolio. Hope you have a great day. Thanks for joining us. I look forward to speaking to you again tomorrow.